How's it going, everyone? This video is going to be over low resistance liquidity runs, the difference between low resistance and high resistance, and why I like to use low resistance liquidity as a target. The first thing we're going to cover, what is low resistance liquidity and how does it differ from high resistance liquidity? So if we're looking right here on the left side, you can see we have a high resting here, and then this price leg right here goes back up and does not sweep it before the reversal. So you can see right here, it has that high, does not get swept. Thus, there is more resting liquidity there. This is defined as low resistance liquidity. Now, if we look over here, we have this resting liquidity, and this price leg goes up and sweeps it. So there is now no resting liquidity there. However, there is liquidity at this high. This is the definition of high resistance liquidity. So in comparing the two, low resistance liquidity is just a high or low with a failure swing, while high resistance liquidity does not have a failure swing and price sweeps the liquidity before reversing. Before I get into any examples, how does knowing where the low resistance liquidity lies actually beneficial in my trading? Well, prior to the session that I am trading, I will look for low resistance liquidity as a target because price is much more likely to expand through this area than if this high was already taken and we only had high resistance liquidity resting here. For this first example, we are going to look at NASDAQ on the 15-minute chart. The order flow is bearish, so looking for a continuation of that order flow, I want to see price reach back up into a premium of the range and into a bearish PD array, which we have a fair value gap right here. Now we also have these highs resting right here. If you notice, they are failure swings, so that is low resistance liquidity. So I'd like to see those be taken out. So as we play it ahead, you can see price went up, took out this high, closing back into the range. I would want to see sell side liquidity taken now. So looking at this range, what do we see? Well, I see all these stacked lows down here. But most importantly, this low resistance liquidity resting right in here. So I'd want to see price reach through this low and possibly go for this low down here. So there we go. Price reaches through that low and then goes and takes out this low as well. Now, as we near the New York session, price starts to get a little bit of a retracement. And if you notice what is happening right here is price put in a low and then could not take that low out. So this is our low resistance liquidity or failure swing. So price reaching back up into the range. And there we go. We see a drop. Now we have a 15-minute fair value gap right here. So this is when I would expect price to go for the fair value gap and then reach for the low resistance liquidity below and ultimately to our draw on liquidity below. And there we go. We get our move down. Now you can see with both of these moves here, I had low resistance liquidity resting below as a target, and I expected price to continue the bearish order flow on the higher time frame and reach below these lows. For this next example, we're going to be looking at GBP USD on the daily chart. And another thing I will look for are consecutive candles where no high is broken. And I will mark that out and then explain it. So what this really is no previous day high was ever taken out for multiple consecutive days. And what does that mean? It means on a lower time frame, there are a bunch of failure swings, or this whole area is low resistance liquidity. So dropping down to a 4-hour chart, you can see all these highs marked out as previous day highs, and no high ever came up and took it. What does that leave us with? Low resistance liquidity, and we expect price, if it starts to break through these highs, to continue through them and expand in that direction. So letting this play out, we'll go back to the daily chart. You can see we expand through all those highs And then as we get a failure to close out of the range, we take a previous day high and fall back in, and order flow becomes bearish. And that is where we're at today. We are going to go over high resistance liquidity and low resistance liquidity. So if you notice right here, we have sell side right here. And as we continue forward, price takes it out, closes back into the range, and this next candle opens up and closes back into the range as well. What does this now create? Well, it's not a failure swing, so this becomes high resistance liquidity. So if I'm going to be targeting it in the future, this is generally when I want to look for the failure swing above it or using the CE of the wick. After price closed back into this range, where do my eyes go? Well, these highs, right? And what do we notice about these highs? These are all failure swings, or what does that create? Low resistance liquidity. So I would expect price to expand through this range right here. And there we go. We get an expansion through that range. Now let's take a look when price returns to this high resistance liquidity and why I don't really like targeting the lows of high resistance liquidity. So if you notice when price came back here, this is when I use the CE of the wick or this failure swing right after the low. And the reason for that being is this is going to be a lot harder to break through than this low resistance liquidity right here. For this last example, we are going to look at NASDAQ on the 5-minute and 1-minute charts. So looking at this original consolidation down here, what do we have? Well, we have a move that took a low before going up. And what does this create? This creates our high resistance liquidity. So as I said in the last example, I generally look for a failure swing after this to target. Now that we have that, we also have an equal low right here. But looking at the 5-minute chart, what do we have right here? Well, we have consolidation. Now with this move up and back into the range, this is our manipulation. So I would like to see expansion to our target and ideally below this old low. Let's go to the 1-minute so you can see what these lows look like and why I would be comfortable taking this trade even if we didn't have this low over here. So dropping to the 1-minute, if you look right here, here, and here, these are all failure swings, and what does that create? Low resistance liquidity. So I would ideally like to see price expand through these lows right into here, and ideally reach for this old low over here, but I would be more confident in it just reaching for this low. So as we let this play out, you can see we expand down, we hit that failure swing, and the equal lows right there. And then we consolidate for a while before finally going down and taking this old low. So you can see why I would rather save myself the time and just exit my position at this failure swing and equal low than holding to reach for that high resistance liquidity. I hope you enjoyed this video. If you did, please consider giving it a like and subscribing, and I hope you have a great rest of your day. See ya.